Here comes big dollar volatility with a critical FOMC rate decision. What is this going to mean for the dollar? Let's jump straight into this. Guys, before we jump into some value from this video around the dollar, just note this is a snippet taken from our week ahead analysis where we break things down via the TFTC premium community. We look at trade ideas. We cover the fundamental themes, the macros, what's driving the assets, the value of the assets that we are trading, and how to potentially capitalize on them, tying macros in with technicals and looking at those trade opportunities on a weekly. And of course, these rundowns, we conduct them on a daily basis as well, dissecting every new bit of news that we have and how this paints the picture for our overall bias when we then go and tie that in with the technicals. And it doesn't matter whether you are a day trader, a swing trader, a position trader, it doesn't matter. It's just knowing those key macros and being aligned with them so you don't get caught off guard. Anyway, let's jump straight into this video. We're gonna start off with the dollar. Okay, let's just refresh our memory as we always do. You know how I like to run with things. Refresh our memory, paint the picture, and see how we're positioning into obviously this week. Now, look, guys, remember I said that week before last, I was looking for this. Obviously, it stays the rebound. I was looking for a push to the upside, but markets just didn't budge. Like when you look at the daily here for the dollar, consolidating. We don't want to commit. And it is somewhat understandable because we have the FOMC rate decision this week and markets don't want to overcommit. All right, they don't want to overcommit heading into this decision. Now, when you look at things last week, let's just quickly look at the data. And there's a reason that I'm going to be mentioning this. Okay, remember, I'm painting a picture here for you guys. Remember, before I get into that, remember these 2 weeks we had previously where we had this big selling. One, lower CPI, so inflation coming down in the United States. We've seen it coming down for the last couple of months. Two, we had dovish Jerome Powell, so the chair of the FOMC, which was significant. He said we've made substantial progress on bringing inflation down. That was huge in terms of language communication. He was, when you've been in the markets as long as I have, right, you understand the cues. He gives us cues. He's not going to say, guys, I'm hiking in September. Typically, that just doesn't happen unless the markets are getting overly carried away. Remember before, they were getting carried away. The delusional markets were getting carried away with a March hike, a March cut. And Jerome Powell had to slap those bitches in the face. Sorry, guys, I just dropped that. I'm just overexcited. He slapped the market in the face like, psh, psh, psh. There's no base for a rate cut in March. He said that explicitly. Sometimes he has to do that and check the markets. Okay, he has to check them so that, you know, we don't get to March. Markets are like, yeah, we're getting a rate cut. And then he doesn't deliver. And then stocks absolutely plummet. He doesn't want that. He needs to check markets. Calm yourselves down. Sit over there, little boy. You sit over there. Calm down. Okay. Where else am I running with that? So Jerome Powell essentially he's given that cue that September rate cut is coming. So if you look here, obviously heading into obviously this meeting July, only a 4.7% chance that they're going to cut this week on Wednesday. It's very unlikely. We know that. But look at the markets. September, 100% probability, largely priced in. Surprisingly, again, this is where markets are a little bit delusional, and I'll talk about why in a moment. 100% priced in for November. Remember, they always go after more. They always want more. They want 3. Look at December. These crazy buggers are pricing in 3 rate cuts. 100% probability for September, November, December. And this is beautiful for us. Why? Because it means we're very one-sided. So when one of these does not get delivered or expectations get pushed back, what do you think is going to happen with this pricing? It's going to reduce the delusional markets. And I'm calling the markets delusional, and you'll see, okay, these 3 rate cuts calm down. They're not necessary. Why? Okay, let's just take a look at last week as an example, right? Let's bring up Forex Factory here. I'm just going to filter out everything apart from dollar. Put this on a week. Okay. Look at last week's data. All I'm fixated on, all I'm focused on, I'm blurring out everything else for the moment, okay? Look, unemployment claims is still pretty good. That's still low, really. Only 235,000 jobless claims in this latest week. That's still healthy. The labor market's healthy there. Okay, that's still inflationary in my eyes. This is what I'm focused on here. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, you know, why is the price just spiked here because of this fundamental reason? I don't understand it. Because all this information is over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. Look at GDP expanding. The economy is expanding 2.8%. Look at that uptick from expectations. Markets were only expecting 2%. That's well and truly above expectations. Now, why am I making a big fuss about this? I'm making a big fuss about this because I'm seeing a bigger picture. We cut rates not just because inflation is coming down. No. Rate cuts are necessary when an economy is faltering, when it's really cooling. Okay, we're seeing really bad jobs numbers. We're seeing growth start to fall almost in contractionary territory. We're seeing manufacturing really come down. We're seeing services, which makes up remember, the US economy is largely services as well. They're not a massive manufacturer. They're heavy services, you know, service-based economy, just like the UK. Look at that number, 56.0. Tell me here, just show me here where the economy is really faltering, like faltering. I'm talking economic downturn that we need 3 rate cuts. The markets are thinking well beyond September and like they're forecasting a massive economic downturn. No, we're not seeing that right now, guys. The only reason that we can price in September is because inflation's come down last couple of readings, okay? It's still above the FOMC's target as well. You got to remember that, guys. Look, if we just pull up a couple of readings here, right, let's look at CPI on a year-on-year on an annualized level. Okay, bear in mind, it's not even core, but 3%, right? We're still above, we're still tracking above the FOMC's target. Okay, so we've got rates that have been set here. Inflation's gradually coming down, right? But not enough. It needs to come further down towards 2%. So the FOMC, after September, look, we've got a couple of inflation readings. Obviously, the next one's coming up in 14th of August. So that's going to be very big. We really, really need to see inflation coming closer towards 2% in order for another hike to be entertained. But allied with that, we need the economy to falter. Okay, and we're just not seeing that as of yet. So what does Ken believe is going to happen this week with the dollar? Let's talk about it. So I don't know. Sorry, guys, this has come off again this week. What does Ken believe is going to happen? Well, ahead of the FOMC rate decision, guys, we're going to keep an eye on, obviously, this is labor market week again, right? We've got the JOLTS job openings, we've got consumer confidence. Well, it's worth just mentioning that. We've got the ADP privately conducted payrolls, which is important ahead of the NFP. It's a privately conducted one, right? Not the official government number, private payrolls. And then, of course, we've got, you know, the big NFP. Now, when we look at average earnings, it's still expected to remain unchanged at 0.3%, which is this is good. Wages are good. At the end of the day, if wages remain high, right, and this is a high number, 0.3%, obviously we've cooled down from 0.4 here, but this is still relative. This is still solid, right? This is still around solid levels here, okay? That's inflationary. People getting paid decent money. If the jobs amount still being added, look, last month, 206,000 jobs were added to the economy. We're still expecting close to that 200K mark. Anything close to 200K is growth territory. Okay, is growth for the labor market. Unemployment rate expected to remain unchanged at 4.1%. Again, why am I mentioning this? I'm mentioning this because if this labor market data remains solid, guys, again, the delusional market expectations, the pricing in of these 3 rate cuts, man, I can't believe they're pricing in 3. It's crazy. Get pushed back. And these dollar longs will go. Okay, they'll go. It'll continue to the upside. We look at the dollar technically here, guys, for a moment, right? Actually, sorry, let me just quickly just round off with FOMC. I've only just put some bullet points here. Obviously, I'll go into a little bit more detail heading into on Tuesday when I put a Tuesday rundown together, and on Wednesday as well. We'll speak about a little bit more specifics, and depending on how the market's open, sort of Tuesday, Wednesday, we'll look at obviously some trade scenarios, some ideas, some key levels, so on and so forth. But just giving you a brief overview, right? I don't in these rundowns in a week ahead, I don't want to stimulate your brain and where it's just like and dies. So just giving you a brief overview. So with the FOMC, what I'm expecting with Jerome Powell, okay, the key is not the decision, obviously the actual decision, it's the key is the press conference. Jerome Powell's going to have that dovish tilt where he notes substantial progress on inflation. We know that it's going to be the same as what caused this sell-off here, right? It's going to be exactly the same. It'll be a dovish tilt there. We'll see in the language that they're getting ready for September rate cut, but as I've noted here, without committing to an easing cycle. So they're not going to, markets, remember, always want more. They've priced in these free rate cuts now. They're like frothing at the mouth. They need to see that confirmation. Jerome Powell, please tell us that this is going to be a series of rate cuts, that we're moving towards rate cuts with an S plural. Okay. That's what they need. And I don't think they're going to get that from the Jerome Powell. We know Jerome Powell. We know him. He doesn't want to give too much away. He plays his cards close to his chest. He holds his cards close to his chest. All right. So what does that all mean? I think the dollar still has an opportunity this week to push to the upside. Obviously, if we start off just top down, work away higher time frame to lower time frame, this situation here is pretty dry when you look at it. 1, 2, 3, 4 months of consolidation there for the Dixie. On a weekly here, obviously price action, we were trending to the upside and we lost some ground by clearing that clear trend line, that was key trend line, excuse me. Price catching demand at 104. Okay, so it's big zone. And you can just see on a daily as well, we're not doing anything. We're lacking commitment, and the commitment will come Wednesday. Okay. And even we'll get a tone being set for the dollar ahead of Wednesday, because we'll keep an eye on consumer confidence, see how confident consumer is. We're going to keep an eye on JOLTS, and we're going to keep an eye on ADP. We're going to keep an eye on employment cost index, see if that's inflationary or not. If the employment costs are high, that's inflationary, because we pass on those costs. Businesses will pass on their employment costs to the consumer, you and I. That's inflationary. So we will have, and pending home sales, we're going to have a tone set for the dollar heading into Jerome Powell. And I can assure you, in my opinion, I'm leaning towards still good data. And if the tone is set before the FOMC, right, there may be some manipulation. So if the tone's set, i.e. dollar positive, data's solid heading into FOMC, the dollar's trending higher, there may be some minor manipulation, trying to take out those dollar longs, but it'll be short-lived and we'll bounce and we'll continue to the upside. That's my opinion. I will see how the markets are shaping up heading into this, and we'll discuss that further. But that's just what I'm forecasting there for the dollar. Obviously, if you look here, let me make myself smaller. I'm blocking the chart again. Don't want that after last time, do we? So if we look here at the dollar, as I say, narrow range. And obviously, you've got to remember the Dixie is weighted heavily towards euro, over 50% weighted with euro. Okay. So we'll look at euro in a moment on the flip side. If we do get a hawkish FOMC, or not so dovish, excuse me, it's not going to be hawkish, not so dovish, this is going to run back into 105 where we're looking. Obviously, you can see the price is being defended and being supported right now. Your downside scenario, if Jerome Powell does talk about rate cuts with a plural, and, if we look at the way the Fed's forecasts are at in terms of inflation, if we look at how, their language, and they do tee up multiple cuts, obviously this is going to give way and we're going to drop. I just don't see that as a likely scenario. But obviously, we're going to be ready for both guys, and I'm going to give you both scenarios come Tuesday once we see how things are shaping up. But I'm still leaning towards the upside. I hope you sort of take that on board, just my valid points. Obviously, at the end of the day, I'm not always right. I'm just giving my opinion and digesting, obviously, the fundamentals at hand here. And just, what did I call? Let me just say it. I'm going to say it. Do you remember this? And those that have been part of the TFTC for a while, okay, I'm blowing my trumpet here. When we're edging to the downside, what did I say to you guys? At some point, the market's going to be slapped in the face because they are being delusional with their pricing of rate cuts. Did I not say it? Okay. And I'm saying it again now. They're being delusional with those 3 rate cuts. So in my opinion, I think things are tilted to the upside for the dollar still. So guys, I hope you found value in this video. As a reminder, I know I always preach it, but I want to continue to create macro beasts, grow and evolve in the TFTC community. I do have a fundamental bootcamp course, which you can check out via the link in the description, where you will really grasp, whether you have any knowledge at all, it doesn't matter. You will really grasp how to capitalize on macros and timing with your technical trading. Other than that, do smash up the subscribe button for me, smash the like button, drop a comment below, stay lit, stay blessed. And what do? Let's get it.